Hey, what's going on, guys? So in this video, I'm going to go over how the overall market is looking. We had some inflation numbers come out today, CPI data, which is consumer spending, and it showed us that inflation is rising slower than expected. This morning, it came out at 0.2%, that CPI number. The expected was 0.3%. So markets took that in a positive way. And if we look, we can see the S&P 500 is up 0.7% and NASDAQ is up 1.23%. Does this mean that we are out of the red and that we are finally going to start heading higher? Well, that's what I'm going to go over in this video. I'm going to show you guys the key levels for both NASDAQ and the S&P 500 and show you guys where we are sitting at and why we still need to be a little bit cautious. So this right here is the S&P 500 and it is very obvious who is in control and where the trend is. We can see that on the 20th of February, we rejected this major supply level up here for the S&P 500, and then we kind of got trapped in this downtrend. So you can see this downtrend, we're making lower lows, we're making lower highs, and we are just heading lower. We can see for today after that report came out, it came out right when we were testing the lower level of that trend line and we were sitting at a major demand zone. If we zoom in right here, we can see that major demand zone is that 5560-ish area kind of right here. So we came to that level yesterday and that's the area that we bounced off of. If we look a little further back, we can see why this area is so significant. So I'm going to zoom back a little bit and show you guys this level right here. So this is back in August and we can see we broke above this major level. It was a old level of supply. We broke above this and then markets just continued to make higher highs and we went to all-time highs. That is the level that we are sitting at currently where we are finding demand. But I also want to go over what is actually more important, which is this major level of supply that we are just struggling to break above. So we can see right here, a couple days ago, we broke above this level. This was on Monday. We broke above this 5650 supply level. We had that break, that retest, and we dropped lower. And now we can see we retested this area on the 11th. We retested this area yesterday on the 10th, on the 11th. And then when that report came out today, we can see we headed higher, but we came right to that level and we just wicked at that level and came right back down. So it's pretty obvious that sellers are still in control in this market. So if you are looking for buy positions, you need to be very cautious and you need to be making sure that you are sitting at major levels of demand. You're at that lower trend line, but this is an area we need to pay attention to, that 5650 level. If we look back at markets, we can see where that 5650 level was. This is back in August again, and we can see boom, 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 many rejections off of that level. Sellers have always been sitting at that level, and when we finally broke above this level, that is when we found that all-time high where we traded into all-time highs. So that 5660 level is the level that you need to be selling into. We need to be selling into those supply levels as long as markets are showing us that they are weak. If we look at NASDAQ, we kind of have a similar story. Same thing, NASDAQ found its demand level down here. This is around that $19,150 level, but you can see that we are rejecting this area. So this is $19,700. You can see we rejected that area. In pre-market, we rejected this area again. If we go back to around August, September area, we can see how significant that level was. So right here, we can see those rejections, same like the S&P 500. We can see when we finally broke above that level, came back, retested it, and we pushed to all-time highs. So it's pretty obvious that this level is going to not only be a significant level, but it is also going to be a level that sellers are going to be sitting at. if we just draw this really quick, we can see, just to get kind of a glimpse of our overall trend, we can see that just like the S&P 500, tech is also in this downtrend. So I would be selling into those supply levels. Do not be buying into those demand levels. And until we start seeing some real reports, some real data, not just this CPI data, but in terms of tariffs, in terms of the feds when they come out and they give their monetary policy on if they're going to increase rates, if they're going to cut rates. Right now it's sitting at 50-50 on if they're going to increase rates or cut rates. So that volatility is there. Those sellers are sitting there at those supply levels. So we need to be careful at those levels. Once again, for ES, it's that $19,700 level. And for the S&P 500, it is that 5650 level. When we start reaching those levels, that's when you need to start looking at individual stocks and looking for sell areas. So you can see Tesla, once we start reaching those areas, that is where we start seeing those rejections. When we start reaching those levels of demand, let me go to extended time. When we start reaching those levels of demand on the S&P 500 and NQ, that is the only time we should be looking for buy areas, and we should be waiting for that break of that trend line. So guys, that is all for this video. Just wanted to give you guys kind of a recap and just an overall look at how the markets are looking. So that's all for this video. I'll see you guys in trading tomorrow. Peace.